All right, guys, welcome to the Trade Findings and Adjustments this morning, the 10th of September. How is everybody doing this morning? If I can get one of you guys to give me a thumbs up that you're hearing me. And by one of you, I mean all of you, just so I can be sure. Ida, would you please type in for me yes if you're hearing me? I'm not hearing from anybody, so I'm going to pick on you. Great. Thanks, guys. All right, just to get started off, I left everything up from last time I was with you, just to make sure we cover our bases a little bit. That was on like the 3rd of September. And we'll come back to Apple. Obviously, Apple has had its sell-off. We discussed that a bit. I can't remember who asked about Smith & Wesson as, I think it was Rich. Rich, are you here? Doesn't look like Rich is here. If he shows up, maybe I'll come back to this one, but Smith & Wesson had a great earnings is what it looked like, and they have just fallen. Looks like they might be starting to look at finding a bottom, but I think I'd chalk that up to what I had mentioned before, which is simply the fact that nobody's going to really know exactly how to look at it after an earnings when they've separated portion of their business, even though that portion, the American Outdoor Brands, was kind of a drag on it. They got rid of a bit of dead weight, so to speak. But I am glad that I missed that one, so I hope you did too. But who knows, maybe there's a chance now from a sell-off to look at getting back in. But I need to go through the numbers more closely on Smith and Wesson's earnings to figure out why there was such a drop. I imagine it was because of guidance and the AOBC, well, not AOBC, but American Outdoor Brands portion causing some issues. So I'll have to come back to that one. I hope those of you that were in Costco leaps took some profits because that's down. I hope that if you were in Target, you took profits because that's down. Under Armour, just take a quick look. I may come back a little bit to Under Armour, but you could be positive there if you'd gotten into this leap for Under Armour, and you could get out. Struggling to get over the $11 mark. And I'll come back to Under Armour more as we talk about a long-term stock position that we're managing versus a trade on a run up. So let me get back to that. Let me get this up here. I just want to talk a little bit about Apple. So this screenshot here is a screenshot that Kevin took and asked me to go over this a little bit. This was shot on Tuesday. Get back over here to Apple. So that was the low day, right? All the way down here around 112. And 112, 113, right? Obviously, this was taken when it was down below 113. You can kind of see, so what are we looking at? We're looking at shares of Apple right here. Get my highlighter, 600 shares. So this is, again, picture of one account that we're managing. Obviously, personal information is not included for obvious reasons. But exactly what happened for shares during that day gain or loss, what the short call position was making up that day, and we had a staggered set of 3 puts at 123.75 strike and 3 at for the second half of the 600 shares at strike of 127.50. Obviously, these are the numbers that it was positive on those puts and what it was making up. So this is a leap that's out there, and kind of we obviously look at that as a different trade or look at it differently, and we'll look to dollar cost average with more leaps. So for now, we're ignoring this one as we're looking at our collar traded position up here. So doing the math, we got 2,500-ish, 5, 6, 7, 8, closer to 9, so 2,900-ish, a little over, making up a $4,884 drop in one day. You just do a little math here. So we're making up, just on this day, making up 60% of the profit. So the question we get sometimes, and the concern we get, is why didn't we take profit on our protection? We could have made 2,900 bucks up, and looking at it back today, you know, get rid of this highlighter first, but we're up from there. We're up to 116, was up to 120 earlier. But you know what? Hey, we could have taken that off for a profit, rode it back up. Are we just dumb, or are we just dumb? Why didn't we do that? So the thought process is, back on that day, take a look at the market. Now remember, And let me just kind of use this as a blinder here. Looking at the screen, this is all we saw. We had a S&P that was hitting the 50-day and pretty close to the same on everything else, NASDAQ and Dow. Here's that day, all on the 50-day. Dow never quite got that far, but the point there is that there was no technical and no news basis to truly pull the trigger on profits there, especially since Apple had not gotten all the way down to the 50-day. But you're saying, well, it got down to the 50-day, it's support level. And you're right, but the next day may have not been. It hadn't been confirmed as a support. It does look like now 2 days later on Thursday that those indexes are holding support. But on that day, there was nothing to suggest that we should go ahead and pull the trigger. And so let me delve into why. It is the retail trader's instinct, the inexperienced retail trader's instinct to quickly take a profit. And it might have been a good guess, it might have been a bad guess, but think about what we're doing with collar trading. Are we trying to make up a couple thousand on little dips here and there? Well, sure, we can do that, but and obviously we do that on occasion, but that's not the main goal, and that's not why we have the protection on. Looking at the price share on that day, 112.82, just to go back to some math, 112.82 times 600, just under 70,000 at 67,000. You add back in the 2,900. You are above 70,000. But long story short, there's around 70 grand there of risk that we're protecting. Is it more important to take a quick profit on a couple $1,000s when doing so then takes all of your protection off and puts that 70K at risk? This is where the experienced professional investor giggles and laughs at the inexperienced retail trader, quick to take a couple $1,000 profit and put yourself at a huge risk. We have the protection on, we had the protection on. We had no technical true confirmation that we had hit a bottom or a support level. Couple days later, it does look like that. And yet it's stuff that we struggle with as well. We were looking at it this morning, seeing Apple up at 120 and thinking, well, it does look like it's bouncing, does look like everything else is kind of bouncing. Maybe we could look at taking our upper section of puts off, these 127s, they're further in the money. Maybe we could look at taking some short calls off for some folks that are more keen to not get called away on shares. As it stands now, I kind of like where we're sitting. Let me update this. We're close to the lows of the day. And so it'll be another conversation here at the end of the day with Kevin on what we think would be most prudent and smart. This is kind of the difference between what we do and what we show you guys. Real numbers, real accounts that sets us apart from an education trade advisory, where you never really know what their true cost basis is. You never really see real accounts. You never really see real money. You never have them tell you when something is a dumb idea. You have them tell you a trade for puts and take a profit, to then, if something goes the other way, you're putting 70 grand at risk. This is the real deal. And again, it is difficult. It's difficult to see things come back up a couple days and making the best decision there, as we don't want to give up gains the other way. Maybe the story would be different if we didn't already have outrageous gains in Apple to begin with, and we're looking to protect some profit here. Maybe they'd be a little different. I don't know. Different situations, different solutions, different decisions to make. But I can't see anything that would justify 2 days ago booking such a small profit on these. Now, let's hypothetically, let's say it keeps bouncing and keeps heading up. Friday, we get better news, or whatever it is, we keep heading up, or we start to get into the run up that they usually have for their conference reveal of new products and whatnot. I would rather take a bit of a loss on some of these puts when at that point we have a little better idea that we're getting a bounce, or that things have changed a little bit. We have a couple days to see the market is continuing to bounce. Those kind of things and those kind of thoughts that start to add up, I'd rather take off maybe the upper puts for a little bit of a profit, or some of them for a little bit of a loss when things are less of a concern. But point being, a couple days ago, that was not the case. And it still might not be. We still have things to look at. and it's sure to be a weird couple of months. Just to kind of mirror what Kevin talked about Monday, or excuse me, I guess it would have been Tuesday, but I think it's important to know who you are when it comes to the market, know your strengths and biases, your weaknesses, use your experiences, have realistic expectations, and make what you can with as little risk as possible. So there you go. Any thoughts or questions on that? And I will say again, thank goodness we still have some things on, as Apple got pretty close to this pivot point, 122, all the way up to 120 and back down to 116. So I'm glad, at least for the morning, we still had things on where they are. Just to give you a little idea. Could be down 9,000, making up another 60%. These are the other shares without short calls covering them. And I would say it's probably a case of things getting caught back up. If it continues to go down, these puts will start to make up more. Kind of a flat day in our market. But guys, is there any thoughts or questions on those ideas? Hard calls to make. Let me just look at a couple other, just for the sake of following through. What's Baidu? Baidu, here's our shares here, protective puts. Pretty close to break even. So it's kind of sitting there, protection as it should be. Let's see, Boeing. Up a little bit. Today at least. Sitting pretty close to where it was when we put those puts on, as it hasn't made up a lot. It hasn't continued to drop. Visa kind of starting to look like it wants to bounce. Disney, I know, is looking similar. So some of these things are starting to give me more confidence and reassurance that things are starting to bounce a little bit. We nearly, by we I mean the market, gave up pretty much all of August gains before it started bouncing. So Disney with their Mulan coming out and good news there, being upgraded. They're hanging in there at 135. So maybe a couple of these we might start to look at and justify, okay, these are looking a little better as technicals continue to help us. We also got a pivot point up here, 34.33, that the market doesn't look today like it can get above. So maybe something more like tomorrow, we have a better idea with what direction things are going to start heading. But we shall see. Under Armour wanted to go back on. But before, I did want to, again, some of the other stocks we've protected are protecting for market risk. But look how well things have gone for Apple. If you look way over here, year to date up here, 123.75 puts have made up 30,000. Short calls have made up 74,000. We could be down 100,000 on those sets of shares, making up a good portion. We've got this sets of shares with just the puts making up 72. We could be 73, 74, moving around. We could be down quite a bit more and making up a nice chunk of that. That is cool to see. All right. Under Armour. You know, we were kind of bullish on Under Armour as I'd given you that bullish leap call trade that was so cheap. Again, not a terrible time if you'd gotten a good price there to go ahead and get in, or excuse me, get out for a profit. Shares wise, as we're looking at things, we looked at this yesterday, excuse me, Tuesday. When everything else was down, Under Armour was up, right up here at 11. And it just looked like we were on the bubble and decided, unfortunately, not to protect it. Now, a couple days later, still fighting for it, and we'll see where it goes. But struggling to stay over that, jumped back down to 1050. I'll be honest, I wish we would have protected it. But now that we're in the scenario we are, back up trying to fight 11, that's a tough one to say. Maybe we've gotten another chance to protect. Maybe with everything else starting to come up, although a bit flat for today. Negative. Maybe we wait another day and see if it see what it does tomorrow. But that would entail being okay with Under Armour coming all the way back down to the 200-day. With 3 days now of it not getting over that pivot point there at 1088, with a day that it couldn't get over that 11, it might be more important to protect. But definitely for leaps, take some profit if you had those. And you know, we're still kind of on the bubble on protecting shares, but I wouldn't have minded it if we had gone ahead and done that Tuesday. I will be honest. That's really all the thoughts and ideas I had for you today, just kind of talking you through my thought process and my back and forth, my the two different angels and devils on the shoulders telling me one thing or another, and trying to make the best decision possible. All right, well, just to recap, I love seeing these up, but on that day, did it really justify taking a profit on those to risk then $70,000 worth of Apple shares? That decision, I think I'm going to stand by, and I think Kevin and I, as we discussed it, I'm glad we did it, or rather didn't do anything. And now we have to decide if it makes more sense a couple days later, seeing more of a bounce, whether we want to put that at risk, whether this truly gives us enough confidence to maybe see things come back up a bit. I would have liked actually to see things fall more, if I'm truly honest. The more things seem to come back and fall, the better confidence you have that we can really justify seeing big money put more money to work and things coming back up. So those are the questions we're going to have to ask and decisions we'll have to make. But guys, is there any questions you have for me or any thoughts? A couple of you had popped in here at the last minute. Sorry you missed the beginning. Go ahead and go back and watch. Went over Apple shares on just showing one account, just to keep things simple, making up on one day back on Tuesday. And I'll put the description in here. September 8th, and why we justified keeping protection on and why we look at it this way. I'm going to say protection is protection, and taking a meager profit when it puts $70,000 at risk. I'm going to say I'm going to lean on the side of taking away risk. How much risk did we have with all of this on? Well, do your math. You'd have to do the difference between these 127.50, 123.75. You add in the short call, pays off some of this 460 and 357. Oh, sorry, that's the mark change. That's not our cost basis. Cost basis obviously would be much better, but we don't have the screenshot of that. But you'd take your cost basis minus your short call credit, and then find your difference between those strikes and shares, and pretty much everything below around 125-ish, maybe more close to 126, is then risk off the table. And risk that you don't have to worry about. And I'm going to say taking away risk and confirming a bounce off a support level has taken place. Certainly looks more like that today, but it didn't Tuesday. All right. Thanks those of you for bearing with me. Those of you that have already heard me go through this, I did want to just kind of recap that as a few of you showed up here at the end here. So go ahead and we'll get this posted and check it out. And maybe we'll see if Kevin can kind of follow up with it on some thoughts here on Monday and give you guys a little more insight. But otherwise, thanks for joining me, and we'll see you guys next time. Take care.